After years of searching, I finally found the hidden gem on TradingView, the indicator that gives you exact buy-sell signals in the pullbacks within a trend. I'm gonna mix this indicator with price action analysis and teach you a very accurate and profitable trading strategy. Just make sure you watch this video until the end and let's get started. Alright, before I add the indicator, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action analysis. Alright, to add the indicator to our chart, here we click on indicators and we search triple trend indicator, this one, which is a new indicator from Big Beluga. Alright, this is the indicator and as you can see it's overlaid on the price chart. As you can see we have three bands here which are dynamically calculated based on moving averages and ATR multiplier. If we go to the settings of the indicator, here in the inputs tab, here you can see that the moving average type is set at simple moving average by default. It's a good choice for trend identification and we continue with this simple moving average. And you can see that the length is set at 70 by default and the ATR multiplier for the bands is set at 3 as you can see. So in this indicator, we have three bands here that they are going to help us with trend identification and trading signals in the pullbacks. For trend identification, you just need to check the position of the bands. If the bands are below the price, the market is in an uptrend, and if the bands are above the price, the market is in a downtrend. Especially paying attention to the third band, this band, the thicker one, because we can occasionally have the price passing the first or second band during the pullbacks. As you can see, the indicator also generates buy-sell signals, and they are generated in the pullbacks and they are shown by the help of these labels. As you can see, the green labels are buy signals in an uptrend and the orange labels are sell signals in a downtrend. These signals are generated when the price touches the bands and turn back. Depending on which band is touched by the price, there are different types of signals. If we go to the settings of the indicator, here for the signal type, you can see that we have three types of signals. Type 1 is when the price touches the first band, type 2 the second band, and type 3 the third band. Depending on your trading strategy, you can have any of them or all of them on your chart. In the strategy that I'm going to explain, I need the signal type 2. So I choose this one and this is when the price has interactions with the second band, this band in the middle. Alright, so here we have an indicator that shows the trend of the market and it also generates signals in the pullbacks. These types of signals are considered as part of a trend following strategy where you enter a trade in the same direction with the trend of the market. Trend following strategies has lower risk in compared to other type of strategies like reversal strategy or breakout strategy because as I said, we are entering in the same direction with the current trend of the market. But for trading based on the signals that this indicator is providing, we need more confirmation so we can decrease our risk as much as possible and we will be more confident that the pullback has already ended and the price is gonna advance or decline in the same direction with the current trend of the market. For this purpose, we're going to use price action analysis, where by the help of the levels that the price action is creating on the chart, we fine-tune our trade entry. Let me teach you how you can do it. For example, here you can see that the price is in an uptrend and here we got a buy signal. When in an uptrend the price goes for a pullback, before that you should find a sewing high, which is where the price advanced and then declined. This is a potential resistance level, and when the price turns back to around here, it may find difficulty to pass this level. So for a buy signal, we find the previous sewing high and we mark this level and we wait for the price to close above this level. When it happened and we got a candle that is closed above this level, we can enter a long position when the new candle is opened. The stop loss for this trade should be placed below the third line because if the price goes below this level, we can say that probably the uptrend is ending, and for the profit target, we set the profit target at the level that makes risk to reward ratio equals 2. This position is in profit until now, but there is no guarantee that it will reach our preferred target because even if you have the most perfect setup, the market condition can suddenly change and your trade end up in loss. So risk management should be executed properly, which I explain that later. Moving back on the chart, here you can see that we have a buy signal. Before the signal, we find the last swing high, which is here where the price consolidated, as you can see. So we mark this level, and when the price is closed above this level, the buy signal is confirmed and we can enter a long position at this point when the snoo candle is opened. The stop loss for this trade is placed below the third band and profit target at risk to reward ratio of 2. And this trade is a profitable trade, as you can see, reaching to expected level of 2 for the risk to reward ratio. Alright, moving back on the chart, in this part you can see that the price is in a downtrend and we have signals in the pullbacks for opening a short position. Here you can see that following this decline of the price, we have a pullback and we got a sell signal here. For sell signals, before the signal, we should find the last swing low, which is where the price declined and then advanced, creating a level that can act as a potential support level for the future price action. So we mark this level and we wait for a candle to be closed below this level. When it happened, we enter a short position. But in this case, you can see that it didn't happen and the price actually turned to an uptrend. Alright, moving back on the chart, here you can see that we have a sell signal, and as I said, when we have a sell signal, we should find the previous swing low, we mark the level, and we wait for a candle to be closed below this level, which happened here at this point. So we can enter a short position at this point when this new candle is opened. The stop loss for this trade is placed above the third band, and profit target at the level that makes risk to reward ratio equals 2. Alright, for this sell signal here, we marked the previous swing low, but you can see that the price couldn't break this level and we had more advancing of the price and another signal at this point. Before this signal, we had another sell signal at this point. We marked the previous swing low, and here at this point, you can see that we got a candle closed below this level. So the sell signal here is confirmed and we can enter a short position at this point with the stop loss above the third band, and this trade is also a profitable trade, reaching to the expected value of 2 for the risk to reward ratio. And for this sell signal here, we mark the previous swing low and it is broken by the help of this candle, as you can see. So another short position could be open at this point, and for this trade, the stop loss is placed above the third band, and this trade was also a profitable trade, as you can see. Alright, moving back on the chart, here for the sell signal at this point, we mark the previous swing low, and you can see that this level is broken here by the help of this candle. So in practice, we could enter a short position at this point when this new candle was opened. Stop loss for this trade was placed above the third band, and this trade was also a profitable trade, as you can see. Before this sell signal, there was another sell signal at this point. The previous swing low is at this level, but the price couldn't break this level, as you can see. So this sell signal here is rejected. Moving back on the chart, in this part, you can see that the price is in an uptrend and we got a buy signal at this point. For buy signal, as I said, we mark the previous swing high and we wait for a candle to be closed above this level, which happened here at this point. So in practice, we could enter a long position at this point with the stop loss below the third level and profit target at risk to reward ratio of 2. Moving back on the chart, we have another buy signal at this point. We mark the previous swing high and it is broken at this point by the help of this candle, as you can see. So in practice, we could enter a long position at this point with the stop loss below the third band, and this trade was also a profitable trade, as you can see, reaching to the expected risk to reward ratio of 2. Moving back on the chart, we have a buy signal here and the previous swing high is here, but you can see that the price couldn't break this level and we didn't get any candle closed above this level, so this buy signal here is rejected. Moving back on the chart, we have a buy signal here and the previous swing high is here at this level, but the price couldn't break this level, so this buy signal here is rejected. Another buy signal we have here, the previous swing high is at this level and you can see that it is broken by the help of this candle, so we could enter a long position at this point when this new candle was opened with the stop loss below the third level and profit target at risk to reward ratio of 2. Moving back on the chart, Here the trend is down. We got a sell signal here in the pullback, and for a sell signal we should mark the previous sewing low and wait for a candle to be closed below this level, which happened here. So in practice we would enter a short position at this point, but this is a false signal, and you can see that the price advanced after that and went above the third band and hitting our stop loss, which we would place it around here. And this is the important point that you must pay attention. There is no indicator or trading strategy with 100% win rate. This is not possible, and losing positions are always part of the game, and you need to manage your risk properly. Otherwise, your losing trades will be out of control and you will lose your trading account sooner or later. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.